Hello everyone, good afternoon and welcome to today's Active Traders Live webinar. My name's Richard and today is Thursday the 25th of April, 26th of April, excuse me. These days are ticking by a lot quicker than I ever realized. So we're getting close to the end of this trading month. So in this live webinar, we will be looking for opportunities to trade during the US Open. However, we do have a pretty significant event. We do have an ECB press conference by Mario Draghi at 1:30. So what I'd like to do is start as we always do with our disclaimer. Please make sure you familiarize yourself with this disclaimer. If you're accessing this recording as a recording, feel free to pause this recording and please take note of the risks involved in trading these markets. Okay, so just a few pieces of housekeeping before I explain to you in a little bit more detail what's going to happen over the course of the next hour or so. Feel free to ask questions at any point throughout. You can locate your chat box on the right-hand side of your screen, so just post any questions in there and we'll get those through. For our members, this webinar is being recorded and will be made available into your members area once the webinar is concluded. And of course, the Q&A session at the end of this live webinar, as we always do. So plenty of opportunity to consolidate perhaps what we learn and what we cover. Okay, so the construct of this particular webinar is for us to review yesterday's trades. So we've identified a couple of opportunities yesterday. We'll see how those opportunities played out. We were only able to take one trade yesterday. We were looking across the markets for quite some time, and those opportunities didn't really reveal themselves. So that's just the case of that's what trading's all about. Some days you're very active, and other days perhaps not so much. So then we'll review potential market moving news, and we'll touch upon the ECB press conference very shortly. Then we will review the markets on longer term timeframes. We'll narrow down and we'll really focus on what we want to be trading, and then plan that trade if the opportunity presents itself. And that's really a very important caveat. We don't want to be trading just for the sake of trading. Otherwise you're effectively guessing, and that's not really what profitable traders do. They don't guess. You know, it's not a gamble. It's about stacking the odds in your favor, and it's about applying a consistent approach to trading these markets. So let's start with a review of yesterday's trades. So for this, I shall get up our trading platform, and I'm just going to fly through these because I'm just conscious of the time. We've got 10 minutes till the ECB press conference, and I really do want to focus in on the euro dollar, and we can see we're very close to a major structural reversal, let's say, in the euro dollar. So we're currently at the 121.56, and a break of that could really constitute an opportunity to push this price lower. So we're just procrastinating around those prices right now. So I want to come back to this market very shortly. So the dollar index is just hanging around these highs. We do expect, we can see that today's low is still above the 90.88, and we're threatening to push higher. This is one of the trades we were looking at yesterday. So we'll have a look at this market as well on a shorter term time frame. So you can see what's happened since we got this breakout yesterday. We've literally been moving sideways. However, as you can see, there is a bias to the upside. So that's why we are still happy to be looking to go long above the 90.88, and this is on a 15-minute time frame. Again, we'll have a look down on a 5-minute time frame, looking at how price interacts and behaves, and we'll do so again with the dollar index on the 5-minute price chart. So we're kind of doing a speedy version of trade selection, let's say, because I would like to even you know, have the Mario Draghi press conference perhaps playing in the background while we watch and see what's happening to price action. So hopefully you'll find it a kind of a unique Active Traders Live webinar this afternoon. So we can see a bit of pullback here in fact, let's have a quick look at this. We're seeing prices pushed lower initially, and then they've now clearly reversed. So we're just going to monitor a few of these markets very closely. Bit of indecision in there regarding the dollar CAD. The Aussie dollar, as you can see, we're hanging around these lows. So we do expect these markets to push lower. We're having a bit of a pullback day, which is not overly surprising after a long period, well, a significant period of strengthening. The pound is strengthening a little bit over the euro just for the time being. So what we're going to do, we'd expect prices to push down down to these lows here, the 86.91, and if we get a break of that, we could be attacking the 86.60 level, something around there. So that might present an opportunity for us. So we shall monitor this market just to see how it acts and behaves from these current prices. Moving on, the euro is selling off a little bit against the yen. We're getting a bit of buying pressure effectively coming back in to some of these equity markets. So that's just interesting, if nothing else. You can see the gap up here. So we closed at this level and then we opened higher. So we did fill the gap initially, and now it looks like we're extending those moves higher. Not much going on in the FTSE or the German DAX. Regarding the gold market, this is a 15-minute price chart. So we were looking for opportunities to sell it around the 13.27, but as you can see, we're kind of reluctantly, squeezing lower. So looking at this on a daily time frame, we can see that we're still threatening to push lower, to be fair, but we do need to break these recent lows. So we will look at this on a 5-minute chart as well over the course of the trading period. The US oil markets are looking like they're going to be pushing higher once more. So we do have some resistance around these levels, so we're just going to watch that for the short term. And to just finish off our review, you can see on a daily time frame, we are wanting this price to actually break above these recent highs. If I zoom in, you can see that they're all roughly the same level. The high of 3 days ago is the 152.59, 152.56, and 152.61. So we have just seen a marginal increase. However, that was very much just a spike above that, and is now looking like it's going to pull back a little bit more. So we can keep an eye on this market as well as the trading session unfolds. So the major focus really is going to be on the euro dollar, and to just touch upon it, we're currently at what is a 4-month low. So the last time these prices were at these levels was mid-January. So we're now 4 months down the line, and we are at these prices once more. So again, from a technical perspective, this is the first major break to the downside, which would be a very, what we would regard to be a bearish event. And you can see the prices are being held up just prior to Draghi's statement. So let's see how price interacts around these levels on a smaller term time frame, and let's see if some opportunities may reveal themselves. So we're going to watch this market very, very closely. What I would like to do, and I hope you can experience this as well on your side, is to, when the ECB conference is live on Bloomberg, we'd like to be able to review that for you. So I'm just off screen. I'm just going to monitor the Bloomberg terminal and see if we can, when the time is right, if Draghi is about to speak, then we can slide that across and hopefully unmute it so you can hear what's going on as well. And what we can do at the same time is be able to see how this is interacting with price. So hopefully a slightly unique session today, just because it's such a major news event. And I'm sure we'll have Draghi speaking now very, very shortly. So to just give you a little bit of an insight behind the news event, and we're slightly doing today's Active Traders Live webinar in a slightly different format. But to just touch upon the news events, we've had the minimum bid rate from the ECB, and they've kept rates at 0%. Now, the general consensus is that these rates are going to stay at zero for a considerable period of time. Now, they are focusing on net bond purchases as well, so they're saying that they're going to remain at 0%, way beyond that bond process actually begins to conclude. So so with that in mind, there is some significant weaker than anticipated data coming out of the Eurozone. So I'm sure Draghi is going to be questioned on that. And it's fair to say that the ECB going into this press conference will be looking to slowly remove the European Union stimulus package, which is currently at place at approximately 30 billion per month. So that's going to remain intact for a little bit longer, and they'll be looking to address it. They're just not sure probably when the conditions are going to be suitable enough to start to remove that stimulus. And with rates at major lows. And to just show you visually what we mean by that, sorry, let me show you the graph. We've been at this 0% for 2 years exactly, and prior to that we had spent another considerable period of time at 0.05. So for all intents and purposes, going back as far as October 2014, we've been virtually at zero. So so that's the way things stand, and we're going to go into this press conference with Draghi very shortly. We're actually going to we have core durable goods orders as well. So I'm not sure if that figure is out just yet. Might be out in a few seconds. So there we have these figures in here. So durable, so it's a slightly less figure than anticipated. The durable goods order month on month is actually a bit of an increase, and the unemployment claims is less than expected as well. So for all those reasons, that's quite interesting. Let's see the impact, if this has had any impact on the dollar index. So we'll just fly over to that. So you can see there's a bit of a volatile reaction to, it's kind of mixed news really, isn't it, when you look at it? So we've had a little bit in terms of the goods orders. Let me get that back up on screen. So let me slide this across just a little bit for you so we can keep an eye on both. So we can see here quite clearly that we've had a negative print regarding the core durable goods orders, and we've had a couple of positive prints. So a little bit of indecision. That's not really surprising with a news release like this. So we're attempting to squeeze lower, but in actual fact, there's no major reason to do so. When you look at these figures, they're very erratic. So we're still within the realms of this kind of mean figure, let's say, over a significant period of time. So no major surprises there, and some of the lesser impact news events are actually quite positive. So we can see how that news has impacted this market. So do bear that in mind. And now it's turning positive. So the initial reaction lower has obviously turned around, and it's probably not as bearish as maybe it might have been interpreted at initially. Okay, so we can just flick through some of the trade selections we've been looking at over the course of this trading period. So we obviously have Draghi currently speaking, and you can see the volatility straight away, a little spike higher, and that's reversing quite quickly. So I'm just looking at some footage off screen. So it's looking like, in fact, he hasn't actually sat down yet. So he's just about to sit down now. And I'm hopeful you will be able to hear this off screen.
Eurodollar not really moving anywhere. There's going to be a lot of tightrope walking from
and you'll get some commentary as well.
How he winds up seeing the recent rollover in some of the economic data. He already mentioned that potentially momentum has peaked. Excuse me, the growth has peaked, but momentum is still continuing. How does he wind up dealing with that, as well as?
So do let me know if you are having any issues in terms of hearing the sound. I will mute Bloomberg every now and then, but Draghi is just sitting down now, and he hasn't actually opened his mouth yet, and you can see the little bit of volatility that is coming in to this market. But I'll pass you over to Draghi now.
As well as inflation.
The Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at their present levels for an extended period of time and well past the horizon of our net asset. Regarding non-standard monetary policy measures, we confirm that our net asset purchases at the current monthly pace of 30 billion euro are intended to run until the end of September 2018 or beyond if necessary, and in any case until the Governing Council sees a sustained adjustment in the path of inflation consistent with.
So here we're seeing a significant bit of volatility, prices flying higher and lower, and we've only been live. Draghi's literally started talking about a minute or so ago, and we've already had a bit of a 40 pip swing. So again, very indecisive, but it just shows you the potential. The whole trading market is really focusing on what Draghi says and trying to interpret that information. So there's a lot of trading activity going on at the moment. So let's see who wins out. Prices are going to push higher or they're going to push lower. So as you can see, very, very choppy right now to be making any decision off the back of this. So we're going to allow this price action to continue, and we'll put Draghi on again, just so that you can get a gist of what he's saying, and we'll see what happens to price in the meantime.
The economy continues to support our confidence that inflation will converge towards our inflation aim of below but close to 2% over the medium term. At the same time, measures of underlying inflation remain subdued and have yet to show convincing signs of a sustained upward trend. In this context, the Governing Council will continue to monitor developments in the exchange rate and other financial conditions with regard to their possible implications for the inflation outlook. Overall, an ample degree of monetary stimulus remains necessary for underlying inflation pressures to continue to build up and support headline inflation developments over the medium term. This continued monetary support is provided by the net asset purchases, by the sizable stock of acquired assets and the ongoing and forthcoming reinvestments, and by our forward guidance on interest rates. Let me now explain our assessment in greater detail, starting with the economic analysis. Real GDP increased by 0.7% quarter on quarter in the fourth quarter of 2017, following similar growth in the previous quarter. This resulted in an average annual growth of 2.4% in 2017, the highest since 2007. The latest economic indicators suggest some moderation in the pace of growth since the start of the year. This moderation may in part reflect a pullback from the high pace of growth observed at the end of last year, while temporary factors may also be at work. Overall, however, growth is expected to remain solid and broad-based. Our monetary policy measures, which have facilitated the deleveraging process, should continue to underpin domestic demand. Private consumption is supported by ongoing employment gains, which in turn partly reflect past labor market reforms and by growing household wealth. Business investment continues to strengthen on the back of very favorable financing conditions, rising corporate profitability, and solid demand. Housing investment continues to improve. In addition, the broad-based global expansion is providing impetus.
Okay, so that's a little bit of feedback from Draghi there, and what's interesting to see is from a technical perspective anyway, is that if I just put a line into this market, and let's change the color of this level because it's a shorter term time frame level. So let's turn it purple just so that we can differentiate between a major level of support resistance with a level of support resistance that we can see on like a 5-minute chart. And I'm going to put one more in just at this low, and look how the price is sort of, well, now we've just broken above that. So that's quite an interesting development. We might be able to get a short-term buy trade off. However, we don't want to necessarily jump in at the highs. We kind of want this market, we're looking at a 5-minute chart. So if we get a push higher and this market decides to come back, if it came back to previous levels of resistance, then we might look for opportunities to take this market to the upside. Now, another market, very, very quickly, I've just identified an opportunity in, and we've discussed this in detail just very shortly, was a break above this period here. And for that reason, we are looking at this on a 5-minute chart. I'm just going to put, this is a significant level here over a few days. So when we look at the daily time frame, and I zoom in a little bit for you, look, we can see that the market, and so far today, was bouncing off that 152.59 each time, and now we've just broken above it. So we do anticipate this price is squeezing up, so there might be a really good opportunity there, looking at the daily time frame. So now when we trade this market, we know which direction we want to trade this market in. So what we're waiting for now is a pullback. If it can pull back to the 152.59, it'd become a no-brainer trade if we get that opportunity around that level to just get into a trade relatively quickly, and we can do that. We can do that very, very quickly. So we're going to monitor this market very closely, and of course the euro dollar. So we want to see how price action, if it continues above this level or if we get a continued rejection, pushing prices lower. Now we're still very close to, we're in kind of the volatility zone. We can still get wild swings to the upside and to the downside. So for that reason, it's probably prudent. We don't want to necessarily get chopped up with something that Draghi may or may not say. So we only want to either try and capture a really good, strong setup in either direction, either to the upside or to the downside, where we can minimize the risk to the downside as best we possibly can, and be able to trade the conditions, which are going to be volatile and very, very choppy. So at the moment, we're just squeezing higher. What I should do again is just allow Draghi to continue to talk while we look for these opportunities in these markets and see what opportunities may present themselves. So I'll pass you over to Draghi once more.
Coming from the monetary analysis, confirmed the need for an ample degree of monetary accommodation to secure a sustained return of inflation rates towards levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary policy measures, other policy areas must contribute decisively to raising the longer-term growth potential and reducing vulnerabilities. The implementation of structural reforms in euro area countries needs to be substantially stepped up to increase resilience, reduce structural unemployment, and boost euro area productivity and growth potential. Against the background of overall limited implementation of the 2017 country-specific recommendations, greater reform effort is necessary in euro area countries. Regarding fiscal policies, the ongoing broad-based expansion calls for rebuilding fiscal buffers. This is particularly important in countries where government debt remains high. All countries would benefit from intensifying efforts towards achieving a more growth-friendly composition of public finances. A full, transparent, and consistent implementation of the Stability and Growth Pact and of the macroeconomic imbalance procedure over time and across countries remains essential to increase the resilience of the euro area economy. Improving the functioning of the economic and monetary union remains a priority. The Governing Council urges specific and decisive steps to complete the banking union and the capital markets union. And we are now at your disposal for questions.
Okay, so that is another very, it's very typically Draghi, let's say, and you can see what's happened, the price action. There is a bit of a bullish, there's a bit of a bullish influence. Now, if we're looking at ranges since he sat down and he started to talk, we're talking about 120, 145 up to, what is it, 121.95, let's say. So we're talking about a 50 pip range. Now, that is quite volatile in what is 15 minutes. However, we've seen much more volatile statements than that, where you could actually see a multiple of that, maybe 100 pips plus. So within the realms of volatility, yes, it's volatile. Yes, it's choppy. Yes, we did break lower. Yes, we did reverse that break. Yes, we did push higher and make a new high. And all of this within a 50 pip range. So we just need this market to kind of try to settle down and potentially give us an opportunity to get into this market. I'm sure he's going to get a lot of questions now regarding the, how the ECB are going to start addressing the bond buying program. So the Q&A session can be equally as as turbulent, let's say, or as volatile as the actual statement himself. Now, Draghi's he's a very good speaker. He's very clever. He's very tactical in what he says. So I'll pass you over for some Q&A, because as you can see, we're getting a rejection of these highs now. And this is why it's just important to, I don't know, there is traders that do trade this price action. It's very choppy. You'd have to get in and out pretty quickly. But we want to wait for something a little bit more sustained. In the meantime, just looking at a couple of other markets, and I will go back to Draghi, because what he's saying is having an impact in the dollar index as well as the euro dollar. So we've got a 50% reversal of this move now. So that's quite interesting in its own right. The euro pound was pushing back a little bit a little while ago. If we can get a pullback to the 87.26 level, it would present probably a really interesting opportunity to maybe take a short trade in this market. So we'll continue to watch this market for now. And the gold market, not much movement, to be fair, certainly not as volatile as the dollar. And the pound yen, which is looking like it's just going to come back. So let's see if we get a close of this market in the next 5 minutes. If this market starts to push lower, we might look to take this market to the upside above the 152.59. So this candlestick should close any second. We'd like it to close, look a little bit more bearish than what it's currently doing. So we'll come back to that very, very shortly. In the meantime, I shall let Draghi answer some questions. And as you can see, this is how volatile it was. So we've now retraced all of that selling. So look, very, very choppy price action, but therein lies the potential. So James, you're saying, should we buy it now? Certainly, in my own opinion, not just yet. It's just swinging too kind of too wildly, let's say. So we'd just like to see something a little bit more comfortable before we start committing our capital to this trade. Let me put Draghi back on for you. He'll be answering questions. They'll be grilling him about the interest rates, the inflation story, the recent data, economic data from the EU, which hasn't been great just recently, and I'm sure the bond buying program and the unwinding of the quantitative easing program that's been in play for quite some time now. So he's got a lot of questions to answer. So I'll pass you over to Draghi while we watch a lot of this volatile price action in the markets.
There are also other phenomena that, like, for example, the drop in backlogs in manufacturing and capital goods sector, that could suggest a softening in demand, and therefore warrant monitoring by the Governing Council. So if I have to just give you an idea of what the bottom line of this discussion is, in my view, is basically caution in reading these developments, caution tempered by an unchanged confidence in the convergence of inflation to our inflation aim. The overall growth remains, as I just said, solid and broad-based, and the risks are broadly balanced, but as I said, with more prominence to global risks, and I mentioned protectionism. Now, having said that, measures of underlying inflation since our last meeting moved sideways, and there hasn't been any convincing upward trend or signs that this upward trend may have to come, is about to come. There are certainly encouraging signs on nominal wage growth, where we start seeing some movements which may support price pressures in the coming months. So This is about it. I think I've answered your question.
Mr. Ferlas?
Tom Ferlas from the Wall Street Journal. Mr. Draghi, the euro is considerably stronger than it was a year ago. In previous speeches, you've mentioned that the volatility of the exchange rate is something that you're watching quite closely. It now seems to have stabilized around 122. Is this still something that concerns you? My second question is, I know you said that you didn't discuss the policy outlook, but a lot of analysts are looking at the incoming data and thinking that, and pushing back their forecasts for when the ECB might start to raise interest rates. Do you think that is sensible? And what conditions would you be looking for, do you think, before you started raising interest rates? Thank you.
Yeah, again, I'll answer your second question first. I said caution tempered by an unchanged confidence that inflation will converge towards our aim over the medium term. But such convergence remains conditional on an ample degree of monetary accommodation. So in the end, a steady hand were words used in the discussion in the Governing Council. Our policy has, as you just reminded us, has served us well and will continue to do so. And therefore, the other words we used were patience, prudence, first of all, in assessing, patience, and persistence. And finally, it goes without saying that the Governing Council shares its steadfast commitment to price stability, defined as a rate of inflation which is close but below 2% in the medium term. Now, on your first question, you're right, the exchange rate stabilized and the recent volatility is less, so it was not discussed.
Mr. Malin?
Jan Malin, Handelsblatt. My first question is on, you mentioned protectionism as a...
Okay, right. What was very interesting there is the price of the euro was not discussed, if I understood that correctly. So he's clearly wanting to deflect the price of the euro. He's probably, I suppose, he keeps using the word price stability. So if prices stabilize at 122, then that's probably okay. I'm just looking here at the pound yen, so I'm going to take a quick buy trade in this. So what we're going to do is we're going to buy this market and we're going to place our stop loss just below this level. So we've got roughly a 20 pip stop loss in the expectation for this market to make new highs. We are trading it. We're trading the pullback just above the 152.59 level, and we're currently getting in around 152.64, and we do have a stop loss about 20 pips below that level. So it's a structural close. So if we get a break above this recent high, then we'll be looking to bring our stop loss up, take all this risk off the table, if that's what's happening. So we're effectively buying the pullback to a previous level of what was resistance preventing prices from push higher, can then become supporting levels of price support, preventing prices from pushing lower. So we hope that this level holds and we start to see this price push to the upside. So that's the first trade we've decided to take this evening. Let's have a look at a few of the others. We're getting the pullback in the euro pound, so the euro is clearly strengthening. And the gold market is strengthening in line with the weakening dollar. So if we flip this straight over to the dollar market, you can see, sorry, let me see this. You can see that we're now pushing lower in there. So The dollar and the gold market are very correlated at the moment. So here is the sustained move now to the upside in the euro dollar off the back of Draghi's statement. So all these traders that were expecting these prices to flush lower were effectively blown out of this trade. A lot of indecision around the 21.94. So now what we'd like to see is if prices can come back to this level of support and resistance without being as turbulent, let's say, or as volatile as the two previous candlesticks. If it can come back and just sort of procrastinate or just consolidate around this price level, it might be a fantastic opportunity to then buy this market and see if we can get a nice trade to the upside in the euro dollar. So the dollar's pushing lower, the euro dollar's pushing higher. We are getting this kind of initial setup here. I'm going to take a very quick sell trade just around this kind of price point. And what I'm going to do is I'm going to place a very, 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 very small stop loss. Oops, bear with me. Just above, just the other side of this this structural. So we're looking at this bit of structure in here, and we're hoping that the 87.26, which is a confirmed level of price, it's been supporting prices previously, and that's the idea behind this kind of trade, to where we get a pullback to that price and look to take it to the downside. So even if we captured, you know, just half the move, if half of this move retraced to the downside, it would constitute a nice risk reward trade for us on this trade. So we're not risking much in terms of capital. In fact, let me share that information with you. So we're talking about a 5 pip stop loss on that trade. It's a bit more of a scalping trade than anything. And let's see if this level of resistance holds firm, and then we might be able to capitalize on a good opportunity in this market. The pound yen. So as you can see, our level of support is still standing up. We're above the 152.59. We're currently in a bit of profit in this trade, but we do want to see these recent highs being taken out. So we're hopeful to see these prices push higher a little bit more. And as I'm saying this, it's obviously coming back, so it's obviously listening to me personally. But yeah, let's see if these prices continue to hold. And we shall come back to this market very shortly. The gold market is continuing to just move away, move back to the upside, and it's important to just note as well that we want to be very clear about which direction we're trading these markets. So when we looked at the daily time frame, we're looking for an opportunity to sell this market beneath this low, because the 1306 has the potential to act like a bit of a magnet to draw prices towards it. But of course, we're getting conflicting information regarding the US dollar and Draghi as well, and the impact that's having on the euro dollar is impacting the dollar index accordingly, and is therefore impacting the gold market. So all of these things are very much interlinked. But so that's quite interesting. We've got a little bit of a break below. I mean, that's okay for the time being, because we are getting a series of lower highs. So as this market moves to the upside, it keeps creating a series of, sorry, what I should have said was higher lows. So this is a higher low, that is now a higher low. So it's looking quite volatile. It's looking quite a little bit unstable. But if prices sort of stabilize around this area and it can create an additional higher low, and we start getting prices pushing higher off that level, then it's still got the potential to be a great trade, which is why we've placed our stop loss just beneath this structural point here. Yes, we could have placed it much further away, but there's no real need to expose that extra capital in this trade. So it's the trade idea still stacks up. We're still looking for this market to push higher, certainly if we start trading above the 152.59. Let's have a quick look at the so this market is continuing to push higher, so we're going to allow this market to do what it needs to do. And we'll just have a quick look at these on the way back. So far, you see with our buy trade in the pound yen, it's obviously a couple of pound related trades that we're looking to take to see if we get a little bit of strength coming in this. And both of these trades are purely from a technical perspective. And we're very mindful of what's going on with regards to the euro right now. It's just to see if we get a little bit of a move lower in this market, and we'd be able to hopefully book in some profit on that trade purely on a technical basis. So we are getting this pullback now in the euro dollar. So if it keeps coming back to the 21.88, it might present an interesting opportunity for us to perhaps buy the euro, at which point we might be able to take a little bit of profit off the euro pound. So you know, these markets can move quite quickly, and what I'm going to do is, just for ease of access, is to make the dollar yen market, I'm just going to slide it up next to the euro pound so I can just flip between the two. So far that's pulling back a little bit against the yen. We're getting a little bit of movement now to the downside. How long that will last for, we shall wait and see. We're getting a pullback to these lows, so I'm quite happy to just take an instinctive trade at this 21.92 level. So from a stop loss perspective, because it's always very, very important to make sure that you mitigate, you draw a line in the sand, which suggests that if this market moves beneath this level, then you no longer want to be in that trade. So what we have the potential for is a bit of a hedge trade here between the euro dollar and the euro pound. If we can capitalize on a bit of a move to the downside in this, we might take this profit and see if we get a little bit of a bounce off these lows, and we start pushing higher in the euro dollar. But we shall maybe, if we looked at if price action was going to come down an extra 8 or 9 pips, we'd definitely look to take a bit of profit on that if it pushes down to these kinds of lows. Bearing in mind we're currently in the euro dollar trade as well. So we're getting a bit of a, so hopefully this now creates a new structural low. So if we get to take out these highs, we can definitely mitigate probably nearly half the risk on this trade, and we'll see if we can capitalize on some profit to the upside. So we now have Draghi's partner in crime currently answering questions, and it's Draghi's belief that rising US yields are a natural development, so they don't seem to be perturbed by that in any way, shape or form. So I suppose just to sum up, so they said that they're going to approach increasing interest rates with a lot of caution. There's a lot of conditions attached to it. So he keeps talking about prudence, patience, and persistence, and I suppose those are fairly good themes to keep the markets sort of dangling and hanging on for. Yes, you know, there is an agenda to increase interest rates, but they're under no no pressure in any way, shape, or form really to commit to any particular time frame. The conditions need to be certainly appropriate for that. And if I understood it correctly, when he was asked about the stabilizing in the exchange rate, the euro dollar at 122, he seemed to suggest that that wasn't really a topic of discussion. So from what I understood, and I was slightly distracted when he was giving that answer, because I was looking at some of the price action, some of the markets, because there was a couple of trades setting up actually. So from what I understood, it wasn't discussed. So that's quite interesting. It obviously means that they are somewhat comfortable with the 122 level, but he wasn't really going to necessarily say anything over and beyond that. So a relatively strong euro at the moment. There's a small increase in wage growth, which is obviously a good thing for the European Union. Interest rates will be kept at low for a considerable period, amidst some recent fairly weaker data coming out of the European zone, and they just look to slowly remove the EU stimulus, the bond buying purchases. So how that all gets rolled out is probably going to be left for another time. We might get some feedback over the course of today's meeting on that. So let's have a look at some of the trades that we're in then. Let's keep a close eye on these. So we're edging closer to our entry price here. We're coming to the close of these candlesticks very, very shortly. So let's see how these candlesticks close and whether we get a reversal back inside this level. So there's the close on the euro dollar. So I really want to see if these markets are capable of actually pushing higher from this level. So we'll just a bit of patience is required now. And the initial volatility, as you can see, as you know, the price action of the last three candlesticks is a little bit it's a little bit more normal. The three candlesticks before that were a little bit erratic, a little bit choppy and up and down and things like that. So if we take a losing trade on the euro dollar, we're very likely to take a winning trade on the euro pound. So it is a bit of a hedge trade. However, if we get an explosive move to the upside in the euro dollar, we would expect, a multiple of our risk to the upside. But it just depends whether we will see that or not. So currently it's looking a little bit bearish. And hopefully this market, squeezes higher and breaks above these two highs. And if we can break above the 152.72, this could constitute a good opportunity to the upside. So we just have Draghi speaking again. So I'll just unmute Draghi so you can listen while I flick through the markets and see what opportunities may arise.
ECB in a way, and more broadly, at the latest count, there are 3 governing council members under investigation. How does that affect the reputation of the ECB and perhaps also the idea of central bank independence? The second question is perhaps for the Vice President, because it's about financials. We can maybe wrap the first one into one. The second question is entirely different. It's about financial stability. So should consideration about financial stability be part of the ECB's thinking when deciding on whether to take further policy measures on the stock of legacy NPLs, given that, as we know, they could have an impact on banks' need for capital and so on? Thank you.
Thank you. Yes, the present situation is one where Latvia can't vote until there will be a governor in place, and so that's a fact. The second point is about, I think the reputation of the ECB is pretty good. It may happen that members, we are people, so members might have problems, and that's why the judiciary process is on its way, and it will be found out. Now, what we care, however, the different judiciaries in different countries will do their jobs, but what's really very important for us is that the independence of the central bank governors, even personal independence beyond being institutional independence, be preserved and be protected. And on this point, the Governing Council is absolutely compact and in full agreement. I think I finished. It's your turn.
Okay, thank you. Well, on the particular point of financial stability and NPLs, let me first start by signaling that the situation has continued to improve enormously for various reasons, but certainly one of the reasons has been the pressure exerted by the SSM, by the ECB bank supervision on the banks that have higher NPL ratios. And indeed, those banks overcomplied with the targets that they defined and were part of the supervisory dialogue with the SSM, which is a good sign. And by the end of last year, the average ratio of NPLs over total credit was 4.8, coming below 5, which is a big progress, although more progress is necessary, and that's an average. The situation, as you know, is quite heterogeneous, particularly in 6 countries where the numbers are well above the average. So progress is still necessary, and the progress has to be gradual, as everyone acknowledges. It cannot be done for one moment to the other. By the way, the banks are much better capitalized than before, and that's very important because it means that in the short term, the question of NPLs is not a question of immediate solvency issue, because the banks have the capital. The problem is that having an important part of their total assets in assets that are not generating normal income affects the profitability of the banks, and that's the more immediate concern. Of course, if the bank is not profitable for many years, then the solvency issue may arise later down the road. But the banks are much better capitalized. Indeed, in terms of the common equity capital ratio, the average now is 14.3. And no bank, however small, has less than 11 in common equity. And that's not total capital, it's just common equity. So all these considerations are important, as it is also important to look to the SSM regulation that brought supervision to the ECB, and there you see that there are micro supervision competences and macro supervision competences. And the ECB inherited then also a macroprudential capacity via the SSM regulation. So the ECB/bank supervision, or SSM, has in its mandate, in its basic legislation, both dimensions of supervision.
Okay, just a technical explanation there of kind of stability with regards to the ECB. I just wanted to draw your attention to a couple of things. Firstly, when you see price action like this, and there's a gentle slope to the upside, you can see how often this market bounces from the highs and the lows. So unless something changes in this process, it's just likely to continue. So you just need to be very careful, like moving forward, that you see something structurally change, which is a confirmed break beneath these lows, for example, where you could see, structural failures to the downside and maybe break these recent lows as well. But you want to, if you're looking to sell this market, might be an opportunity to sell roughly at these highs. You'll have a little bit of resistance coming in at this point, but don't be surprised if you get a bit of buying pressure coming in at these lower levels. So that's just an observation really on that market. So moving back to our trades, let's have a quick look through these and see how they're performing. So straight away, we're very close to breaking new highs, but we are now in profit in this trade. So we did suffer a bit of a pullback, but because we had our stop loss at this technical level, and in fact, what I'm going to do now is bring up our stop loss, because I would like to do so when this market breaks this high, but because it hasn't done so, if it still rolls over to the downside, then it's a structural failure to the downside beneath this low now. So there's no need for us to expose that extra bit of capital unnecessarily. So we're going to just mitigate a bit of risk on this trade. So now we are just exposing, bear with me. Sorry, if you hover over the stop loss, yeah, so there's a 13 pip exposure in this market. So, and it just adds a bit of, you know, if we look for a 20 pip gain in this market, then that would be a good return for this trade. So we're currently in profit. We would like the market to squeeze a bit lower, but as you can see, the validity of the trade really stacks up. So again, we can work with this recent high. So it's only bringing down the stop loss just ever so marginally. So we're just going to put it above that high now. So now we're 3 pips. We have a 3 pip risk. So that gives us a really nice. We're already up 10 pips. So we've got a really nice positive risk reward. And let's see if we just get a small move lower in this market and hope it doesn't sort of bounce all the way back and push above the 87.26. So we'll continue to monitor this one, see how we get on. The euro dollar threatening to push higher, but not doing so successfully. We do have a decision to make, but we might just pause that decision for a little bit longer. We have an 18 pip exposure in this market. I'm looking at this low because it's an opportunity to take away 50% of the risk on this trade. I would just like the price to break above the 21.94 level, at which point this low becomes more of a structural low, and hopefully we get that opportunity to just mitigate risk on this trade. So this is how sort of choppy or volatile these markets can be. So we are trading the most kind of volatile markets you can trade, with Draghi speaking and things like that. So the risks of this trading session are a lot higher than normal. So let's see if we can make some profit trading these fairly choppy market conditions. So again, we can see this sort of failure of these highs, but as long as we're above the 152.59, we're still very happy to be taking this market to the upside. Okay, very good. So yeah, thanks for that, James. So okay, good. So we just got to monitor these trades for the remainder of this session, really. See if we get a little push lower in the euro pound, maybe we can book in profit before we finish. The euro seems to be wanting to pull back, so that this market still might experience some considerable volatility, even for the next half an hour or so. So it was a speculative trade, and we'll see how we get on with that market. And there's still every potential for the pound to continue to push higher if we are above that 152.59 level. So we've already begun to mitigate risk, take risk off the table as quickly as we can, but doing it from a structural perspective, not just a subjective opinion, but actually more objective, based on highs and lows. So that allows you to stay very neutral, very objective in your decision-making process. And again, that's hopefully all very, very useful skills for you to learn. Okay, so hopefully we get a nice little explosive move off this little pullback here, and we watch it very, very closely for the remainder of the session. So it'd be nice to capture 3 small winning trades, even if they are small winners. If we get a break above this high, we might take a bit more of a longer term approach in the euro dollar. Because don't forget, this 21.56 is a long-term low. So all we're doing on an intraday basis is buying above a level of support. So you are stacking the odds in your favor by taking this type of trade. Now, there's no guarantee it's going to be profitable. It might not be profitable now. It might pull back to these lows again, and then it might bounce up and make a really sizable move. So the timing of trading is probably the hardest thing for traders, but it doesn't mean that if you take a losing trade, as long as you're very conscious of your risk management approach and you understand what you're doing in these markets, there's nothing wrong with maybe even taking a couple of trades in the same market, especially if you have enough confidence in that trade that is going to be successful. So now we're just edging into a little bit of profit there in the euro dollar. Let's see if we get a little push lower here in the euro pound, and we are pushing higher. So let's hope we break these new highs, and then we can start looking at profit targets and all the good stuff, the reasons why we trade these markets. So Draghi and his team are still answering questions in Frankfurt. So we won't expect this volatility to die off anytime soon. So I suppose now is a good time. We don't finish this session for a few minutes, but if you do have any questions about any of the trades that we're either in, if you want further explanation in terms of why we've taken the trades, whether it's approach to risk management or psychology behind the trade or the actual entries and exits, feel free to ask them. Yeah, so how long do you expect this volatility to last? So Philip, good question. Normally it's for the duration of the press conference. So if you can imagine, there's a hall full of, let's call them media sharks, and they are kind of baying for blood, so to speak. So they will ask many similar questions with slight variations, and you'll find Draghi often repeating himself, and they're trying to get an angle from whatever their perspective may be. I mean, that's just the role of the media. Now, a lot of these central bankers are very, very savvy to the whole system and how things operate. So it is a good question, but certainly for the duration of the press conference, you're likely to see extended volatility. Now, what we can do is we've now got this little price action breaking above. So now we've created another structure. So again, we're going to look to take approximately half the risk off this table, off this trade. So when we get into trades, if we get an opportunity to mitigate risk, we generally like to take it, unless there's a reason for us not to do so. Clicking through some of the other trades, there's still every signs that this market will push lower, so we'll keep an eye on that one. And we are struggling to break new highs there in the pound yen. But again, as long as we're above the 152.59, we're quite happy to remain in this trade. The dollar index squeezing lower, and the euro dollar as a result pushing higher. So we continue to watch these. So James, generally when a trade does not do what I want it to do, should I just exit the trade? Yeah, very good very good approach to adopt, actually, James, is to, I suppose, an approach that we've learned very, and certainly from a personal perspective, very early in my own trading career, was you want the market to behave as you expect it to behave, and if it decides not to, or it's very choppy, or it doesn't do what you want it to do, and you're waiting to execute a trade, and it doesn't quite perform, it doesn't quite give you the setup that you're looking for, then in my experience, from a personal perspective, and I've been trading the markets over 10 years now, then it's better that you step back from that trade. So I would absolutely concur with that for sure. And certainly if you're in a trade and it's not performing as you want, and it's giving you a strange feeling about the trade, and I suppose then your own psychology starts to come into play. So what you want to try and do is rid yourself of any of that kind of thinking and double thinking. So if a trade doesn't perform as you expect it, you're not comfortable with it, just get out of that trade. Don't commit your time and your certainly your financial resources, but most importantly as well, your mental resources in a trade that's not really doing what you're wanting it to do. So yesterday was a good example where we were looking very closely at the dollar index, and I'll just take you across to that now. I just want to have a quick look at the euro pound. So we're getting a little bit of a bounce back on that. So let's see how we get on with that trade. And again, it's procrastinating there. The dollar is pushing lower and the euro is pushing higher. So hopefully we'll have a couple of good trades out of that. So yesterday's price action, I do want to share with you because it's a good, we tried to take this trade yesterday. And if I remember rightly, it was looking to buy the pullback. So we got very close to our level, and initially we pushed higher, so we were quite happy with that. But as you can see, the market started to roll over to the downside, and we took a small losing trade on that market. So all we wanted to be is a buyer above the 90.88. And as you can see, what happened, and we were watching it for the majority of the day, we got this really choppy price action, which had a slight sort of bullish angle to it, but nothing of any major significance. So because we didn't clear these highs with any significant commitment, and the first candlestick where you broke the high, it was a spinning doji, a bearish spinning top candlestick, which doesn't fill you with confidence. And then you fail to break those new highs, and as you can see, you get a rollover. All of a sudden, that tells us that this market is not behaving as we want it. So, are we eager to get into that now? Not really. We're coming to the end of the European Open, so we're not filled with huge excitement now as far as the trading day is concerned. So for all of those reasons, we didn't want to get into this market for a second time. So we just didn't want to commit that capital. Commit the thinking time to a trade that was actually showing us and telling us that we're not ready to move higher. And as you can see, we broke higher over the course of the day, and as a result of Draghi's press conference, we've seen the dollar index sell off. So so let's see how this is impacting our euro dollar. So a couple more questions coming in. So which has the greater volatility, ECB or the non-farm payroll? That's a very difficult one, because let's say if the non-farm payroll is a massive miss, if they're projecting 200,000 jobs and they get 50,000, that's a huge miss. So you're going to see major volatility on that. The same for the ECB. If they try to surprise the market with a 50 basis point move, perhaps in the interest rates, then you're going to see huge volatility. So it's not so much which event has the greatest volatility. It's an event by event basis, and you can look back at non-farm payrolls, and you can look back at ECBs, and you can identify major months where the volatility was astronomical. Now, this is fairly mild to be fair, for an ECB press conference. We're still trading within that 60 pip range, which for an ECB press conference is a bit on the mild side. It's because the markets were building in and expecting 0% interest rates for that to continue. So there was no major surprise. And obviously Draghi came out during the press conference and hasn't really said an awful lot apart from things are kind of on track, so to speak. So that's what's given the euro there a little bit of a positive angle on it. But how long that will last for, we really do not know. So we'll just monitor these trades for the time being. And let's see if we have a couple of winners out of these markets. So we do have currently 3 trades currently open, which we're going to continue to manage for the remainder of the session. And I think once we have the chat room set up, we'll be able to post the results of those trades in there and notify what decisions we make with regarding to closing or booking in profits on those trades. So all that's left for me to do now is to obviously thank you all very much for joining us. Do take care, and we look forward to seeing you next time. For everyone here, bye for now.